Why and how did I make my first real estate investment in 2024? Let's find out in this video. If you ever thought about investing in real estate but did not know where to begin, this video is for you. The primary goal for this investment was to create cash flows out of a hard asset. As a predominantly equity investor, this was also part of a great asset class diversification strategy. So the biggest reason for buying this property, which is Raheja Prime 1, now this property is located in Navi Mumbai in the MIDC area, right next to your Mumbai-Pune Expressway. About 7 minutes walking from Juinagar railway station. What's even more interesting is that you have a World Trade Center building that's going to come up right next to this building. Google data center that's probably going to come up in the next 3 to 4 years. And there's Amazon Web Service data center. It's probably going to be set up in the next 1 to 2 years. So there is prime business activity that's going to happen right on the border of this building. Now, to understand why having Google and Amazon and World Trade Center is important and why having factories and logistic parks next to your property is important is because that's how businesses work. A lot of businesses are your sort of B2B businesses, which are smaller in scale, and they depend on the bigger businesses to get the work done. And the closer they are to these business hubs, the easier it is for them to get any kind of business. With this logic, what makes our property, which is a 10-seater office, a great investment for me is that these smaller businesses, that could be your chartered accountants, lawyers, sales officers that would come up here, set up shop, and they would need me as in the provider, and that's something that cannot be replaced. Location is something that is not replaceable in real estate. So strategic locations will always have value. They will always be easier to give up on rent, and that will always be easier to sell at a premium to earn that particular appreciation on price. Now the $1,000,000 question, why did I purchase an under construction property? To make returns. And believe it or not, making returns, the easiest way to make returns is to take some risk. And it's whether your reward is compensating well enough for the risk that you've taken determines whether you're a good investor or not. Now, in an under construction property, what happens is that the builder wants to sell off early inventory as quickly as possible to secure that ground for him. You will always see that whenever this building is going to come up, the first people who are into the door, the builder always tries to give them any kind of deal that they can to secure that kind of money. He knows that once my property is sold, I can then later jack up the price for the second half of the building for the later investors to come in. The later investors are also taking less risk because half the building is already done. There are already people who've shown faith. They must have already gone through a lot of paperwork. So it seems secure to them. So they are willing to pay that premium, and that's how the builder will make money. But what I try to do is, I was in one of the first investors in the building. I got it for a price which was at about 35% discount. Now, why do I say 35% discount? Because before visiting this particular property, I went to a property that's about a half a kilometer away. They quoted me a price of 1.24 CR for a 450 square feet carpet area office. This particular property that I got is for 80 lakh rupees. The only caveat is that I have to wait for 3 years and that it's an under construction property, which comes with its own risks. So I think it's even more important that we learn what are these risks and how can we mitigate these risks. Let's talk about risk mitigation. Now, research is something that has to be done very thoroughly before purchasing any property, let alone an under construction one. So what kind of research can you do? The first one would be to find out the RERA registration, right? If you don't know how to go about it, the best way is to type up the name of the project on Google and just add the keyword RERA registration number. So you will get the RERA registration number within the first 1 or 2 links. Copy that link, go to the RERA website, just search for that particular number that you've just received, and you will most probably get the certificate of that particular project, the RERA registration certificate, which is very important. Also, what you could do is go to the view details button over there. If you scroll down, you will find all the recent projects that have been completed by that particular builder, and that will give you some kind of a past track record or credibility that you could rely on, because this is purely government data. And the thing to look here would be status of each of those projects. Most of them should be completed. Almost no one should be abandoned. So if you have these things working, then you're probably in good hands. For Raheja, all the projects were completed that were listed on RERA. Another level of check that you can do is find out if the project has been financed by some NBFC or some housing finance company. What this means is that even if the builder is not able to sell all the properties at a timely manner, he will not run out of funds. The project financing works in such a way that whenever the builder reaches a kind of milestone, cash is infused by these lenders so that the project can keep going on smoothly. So that is an added advantage and it gives you that much needed confidence. Finally, what was also going in favor of this property is that Raheja, the builder, already has launched its REIT, that is Real Estate Investment Trust, on the National Stock Exchange and the Bombay Stock Exchange. Now, this means that they are already managing a big portfolio of property. They're renting it out. Basically, they're also involving a lot of public money into it. So they have to be kind of responsible to do that. Any kind of project delay or any kind of project incompletion will tarnish their reputation and would probably drive down the prices of those REITs. So they will be extra cautious in before doing anything illegal or unethical. Let's talk about financing. Now, I paid 14 lakh rupees out of my own pocket, which were my savings. This amounted to about 10 to 20% of my total cost. The rest I am going to finance with HDFC Bank. Now, the loan terms are such that I will get a loan of 75 lakh rupees at 10% interest rate for the next 15 years. That would amount to about 80,000 rupees, 75 to 80,000 rupees of EMI. I'm going to offset a lot of it through my rental income. That would be around 45,000 to 60,000 rupees depending on where we are 3 years from now. 45,000 is the rent today in adjacent buildings. I am hoping that it would go up to at least 50,000, 55,000, whatever in the next 3 years. And let's hope that every year that passes by, I'll be offsetting more and more of my EMI, because your EMI will stay fixed, but your rental income will keep increasing. Another great thing about financing your project through a bank is that you don't shell out all your money at once. A real estate investment is never a growth investment. It's largely a cash flow investment, right? It gives you cash flow into your bank account every month. You have money to show for it. But what happens is that returns wise, you want your money to be still parked as much as possible into equities. You will easily beat that 9 to 11% return that you can get on most real estate in the world. It's always crucial that you put your money in the right place, and wherever the IRR is low, you should use someone else's money to fund your own project. Another advantage of financing your property is that you enjoy tax breaks. The interest that you incur on your loan can be offset against the income that you get from that rental property. So let's say you made a rental income of 5 lakh rupees that year, and your interest incurred on that particular project was 3 lakh rupees for that year. You will only pay tax on 2 lakh rupees. Isn't that amazing? Now let's look at the reward side of the story. As I told you that I had already inquired in some other building which was ready to move for 1.24 CR. Now let's imagine that for the next 10 years, this 1.24 CR price tag only moves to about 1.5 CR, right? Very slow appreciation, doesn't matter. Now let's move backwards. In the next 10 years, I will be paying an effective EMI of about 20,000 rupees. The logic is that I'll be asked to pay about 75-80,000 rupees as EMI, and on an average, I would receive a rent of 55 to 60,000 rupees. Now that comes to about 24 lakh rupees in 10 years. At the end of 10 years, I will be expected to pay about 36 lakh rupees to the bank in the outstanding principal. So at the end of 10 years, if you combine those two amounts, that's about 60 lakh rupees that will go to the bank. If the price was 1.5 CR, and if I give away 60 lakh rupees to the bank, I'm left with 90 lakh rupees. Now this 90 lakh rupees has been created just out of 15 lakh rupees that was my initial investment. That's a 6x return over 10 years. That's about 20% CAGR. Not a lot of asset classes do that for you, and definitely not at the scale. You will never invest 1 crore rupees or even 15 lakh rupees in one single scrip of equity. but you will do that in real estate. And that's the power of real estate. That's why a lot of people end up making money in real estate and not in equities. So what's my final piece of advice? Well, whenever you're going to make any kind of investment in properties, be it ready to move or under construction, please always do your research. Please always do your due diligence. But even before that, make sure that real estate really fits your risk appetite. It's not for everyone. You would not want a situation where you're constantly thinking about that particular property that a builder is building. You've given him some money and you're constantly worried that your money will get stuck. Whatever is the upside of that investment, it's never going to be worth your mental peace. So please make sure your risk appetite works out in that direction. Always make sure that your rewards are well aligned with your risks. And finally, make sure that the deal always works for you in the long run. Sometimes a ready to move property will work for you better, even if it is higher in price. So make sure you have everything covered before investing any money, because ultimately your money should work for you. Okay guys, I really enjoyed making this video and I hope that you learned a lot about how to invest in real estate, especially if it's an under construction property. If you have any questions, please type them down in the comments below and I will try to respond to every one of them. And I'll see you in the next one.